Hello and welcome to Lone Investor. So a little bit more than a month ago, I did a video on my point of view on the earliest bull run date. And back then, my point of view for an earliest bull run will be starting from June. So now a month later, let's take a look at the data again and see if that date still stands out or if we expect it to come sooner or later. So back then, Nasdaq was trading around 13.6K, and I was saying that the Nasdaq does not really have a good catalyst to bring it back up to the 15K level. So the max we will see is maybe we challenging the 14.2K, and then we'll be most likely back to the 13K area. And as you see, after April 13, it didn't even get to the 14.2K area. It consolidated a little bit and it continues to fall lower to where we are now. We're now at 11.5K. So my thesis for the earliest bull run in June is due to the slowdown in inflation, and the Fed will be more dovish again, and they will not raise as much rate hikes as they were saying, and that will give a good catalyst to the market. And I've also mentioned they were late into raising rate hikes. As I've shown the PMI data, we are already seeing a economical slowdown. That was my reason for they will not raise as much interest rate as they say they would. So the April CPI data, as expected, it has slowed down a little bit, but it did not slow down as much as people thought. So the target was 8.1%, but it still went up 8.3%. So that's why after the CPI data is released, it only gave a few days of rally, and then right now we're coming back down again. So for May data, I do expect to continue to see a slowdown. And as I've mentioned in my previous video, the used car price is coming back down, and that also contributes to the inflation data. And last week, one of the news that came out that will really help the slowdown of inflation is when Target and Walmart misses their earnings. Now, the reason behind that is they're so well managed for the supply chain, and they actually stock up more than they intended. So both of them build up a huge inventories. You can see here, Target is carrying 43% more inventory than last year. So with this amount of huge inventories, the only way that they can get rid of them fast is by doing rollback or doing on sales. And when they do clear out the inventories through sales, it will help with the inflation problem. So this is actually a good sign, but since we are already near the end of May, if they start to do these sales in June or July, we won't be able to see the CPI data until in August area. And there was also a video by ARK talking about inflation and deflation by Kathy Woods and one of her friend Nancy. And so they were showing data also talking about the Target and Walmart building up a huge inventories, and by doing sales, it will help fight the inflation. So their timeline of the market relief will be somewhere in June, July. So depending on how fast and how much Target and Walmart do their sales, the CPI data for June and July will most likely to drop down more than April or May. And the next thing to look at is the 10-year bond yield. And on May 11th, I have traded that the 10-year bond yield on the monthly chart is way overstand in the RSI, and we might be seeing a possible head and shoulder pattern before coming back down to 2.1 to 2.2% near the end of the year. And when the 10-year bond yield does drop back down, it will benefit the tech stocks, and tech stocks also contribute a huge part in the S&P. So the drop of the 10-year bond yield will most likely to create a market rally. So right now, the 10-year bond yield, the body is somewhat forming at the moment. So if we see the head and shoulder pattern plays out, the target price would be the inverted height of the body, so which will bring it to around the 2.3% area. So if the pattern plays out, it'll put it in the beginning of June. So after June, maybe it'll start to wave down until it reaches the 2.2, 2.3 area. And I mean, the 10-year bond yield has dropped 40 basis points in 2 weeks, and the market seems to be not reacting to it yet. And as for the breadth of the Nasdaq 100 stocks, and I've showed you guys before, every time when we are below 15, we are considered with some sort of a market bottom. And in the ARK video, in one of the slides that they show, they were showing the PMI data versus the rate heights. And I've also showed this before. The Fed usually raises the heights when the PMI is at the top. And right now we're already seeing an economic slowdown, and it's not the time to raise heights. They already missed their chances. So Nancy here, she also don't believe the Fed will raise as much rate hikes as they have said before. And the Fed also look at the core CPI, so it's without oil and without food. So that's why you don't see me mentioning them in this video. So overall, my bullish case is still remain. And as for the timeline, I was very aggressive for saying in June, and they were all depending on the FOMC meeting on June 15th. But as I've mentioned, Target and Walmart might take some time to sell off their items, so June may be too optimistic, so maybe we're looking at July or maybe possible August. And I've also mentioned the 200 weeks moving average on the weekly chart. So if the sell-off does continue for the next month or so, the 10.8K still remains a very strong support at the moment. And as you know, I was only expecting it to drop around 12K area when it touches the tops in here. I didn't really expect it to drop very close to the 200 weeks moving average. And now it is a very good chance to add stock instead of selling them. Now, with that said, there are still some possibility that might bring the market down further. One of them would be if the Russia-Ukraine conflict escalates, and the second would be the China lockdown going longer than expected. If they have a half a year of lockdown, it will create a supply chain issue once again, and we will see the rise of inflation. So those two are the downside catalysts that we have to watch out for. But given the current data, I still believe we are very near the bottom. So this is it for the updated data on my point of view on the earliest bull run. If you like the video, subscribe to my channel and give me a thumbs up, and I'll see you guys next time.